Why are markets falling down and should we be greedy at this point of time? Let's break all the reasons down. Short-term volatility and market valuations. Markets work on demand and supply in the short term. FIIs, DIIs, HNIs, insurance companies, domestic institutional investors, retail investors put their money where they find reasonable valuations. When Indian companies look expensive, they are compelled to look cheaper valuations outside India and thereby they make the investments outside. The second is currency depreciation. Nifty has around a 12.5% return in INR terms, but in USD terms, the returns are much lower due to rupee depreciation. Time and price corrections. After a market rally, consolidation is very imminent and normal. Time correction means the market stays in a range-bound manner. Price correction means the prices fall. Profit booking. After a good historic run, institutional investors or any retail investors or any other investors for that matter, it is very normal in their ordinary course of business to book profits. US market impact. The US market is the mother of all markets, we cannot deny it. Trump's dollar strengthening policies and high interest rates led to fund infusions back to US. Tariffs and imported inflation. Trade tensions led to imported inflation in the US, forcing the Fed to maintain higher interest rates. FII selling. In the Indian markets, FIIs has been constantly selling their stakes in the last 3 years. So why are they selling? They are selling it because they are getting a better returns in dollar terms in the US. So money from all the emerging economies are flowing back to US because they are getting a better interest rates in US and they do not have any currency depreciation issues. Drill, baby drill. This is the famous dialogue which Trump keeps on saying. This keeps oil prices range bound, impacting global markets. The China factor. Of late, the Chinese prices have corrected, which made its valuations very reasonable. So investors all across the globe are finding Chinese markets very well valued and reasonable. That's one of the reasons why the money from the Indian markets are flowing to other emerging markets like China. The corporate earnings lag. Indian companies' earnings are not keeping pace with expectations. Domestic consumption slowdown. Rural distress and cautious spending hit consumption growth.